Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into Gulfport Energy Corporation's recent filing. Let's see if their financial moves are as smooth as an Oklahoma oil well, or if they're drilling into some trouble. This report is about Gulfport buying back its own stock, but is it a smart move or just a way to pump up the stock price? We'll break it down 10 before we start, as smooth as a smart move, or just a way to pump up the stock price. We'll break it down for the stock price, we'll break it down pro forma before we start. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. This is a Form 8K, also known as a current report. Companies use this form to announce major events that could affect their investors. Think of it as a company's way of saying, hey, something important just happened. The date of this report is May 14, 2025. So the information we're looking at is as fresh as yesterday's news. This report is filed by Gulfport Energy Corporation. They're based in Oklahoma City, Oklahoma. Gulfport's common stock, meaning regular shares, are listed on the New York Stock Exchange under the ticker symbol GPOR. So you can easily find their stock price. Now let's get to the heart of the matter. Item 7.01 is about Regulation FD disclosure. Regulation FD is a rule that says companies must share important information with everyone at the same time. This prevents companies from selectively telling some investors before others. Gulfport Energy entered into a purchase agreement with some big investors, specifically accounts managed by Silver Point Capital. These investors are called the selling stockholders because they are selling shares. Gulfport agreed to buy back 76,986 shares of its own common stock. Buying back shares is called a repurchase, and it's like the company investing in itself. The price they paid was 94 ton 84 24 then 84 94 ton 84 24 24 ton share. That price represents a 1.7% discount to the stock's price on May 13, 2025. Discount basically means they bought the shares for a little less than what they were trading for. All in all, this stock buyback costs Gulfport about $15 million. They expect to close, meaning finish the deal around May 20, 2025. This repurchase or buyback is part of Gulfport's existing $1 billion common share repurchase program. That's a lot of money set aside to buy back shares. As of May 14, 2025, before this deal, Gulfport had already repurchased approximately 6 million shares. They paid an average of $110.09 per share for those shares. So far, they've spent around $660.6 million on buying back their own stock. After this new $15 million buyback, Gulfport will still have about $324.4 million left in their repurchase program. The report is signed by Michael Hodges, Chief Financial Officer of Gulfport Energy Corporation. This means he's responsible for the accuracy of the financial information. Now let's analyze what all this means. Gulfport Energy is using its own money to buy back its shares from investors. This can be seen as a positive sign because companies usually do this when they believe their stock is undervalued. They might also do it to increase the value of the remaining shares, because when there are fewer shares available, each share becomes more valuable. However, it's also important to consider why the selling stockholders are selling. Are they cashing out because they think the stock price is as high as it will go? Or do they have other investment opportunities that they find more attractive? Comes the fact that Gulfport is buying back shares at a discount is good news for the company, but it's a relatively small discount at only 1.7%. And looking at the numbers, we see that Gulfport has already spent a large amount of money on stock repurchases, $660.6 million, with another $15 million on the way. This shows that they are committed to using their cash to support the stock price, to increase if the company, to using their cash to support the stock price, to increase if the company performs well. The main risk is that the company might be overspending on stock buybacks instead of investing in growth or paying down debt. Overall, Gulfport Energy's stock repurchase program is a significant factor to watch. It shows that the company has confidence in its future, but it also raises questions about whether they are using their cash wisely. For now, it seems like a calculated risk that could pay off if Gulfport continues to execute its strategy effectively. Alright, that's our breakdown of Gulfport Energy's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.